So I'd like you to put your investor hat on and help us out with advising our viewers who might be earlier on in their careers, have amassed like $10,000, let's say, of money to invest into an asset or into something. What would you recommend they look at today?
Today?
Yeah.
Not AI.
Not AI, okay.
I think it's overvalued.
Overvalued.
Maybe in 2 years once it comes back down.
Interesting.
So I think, any area that has a lot of capital following it, the valuations tend to go up. It's great. You create a bubble. The bubble and the capital in the bubble builds infrastructure. And then a couple of years later, you're left with the infrastructure, which is amazing to build off of. So the same applies in real estate. Money flows in, bubbles, prices go down, but the real estate stays. Yeah. Blockchain, bubble, money flow in. It was great. And then ultimately you built out all this amazing infrastructure, all these different protocols, and then you come out of that and you're building real value add companies. So we have a few in the portfolio. We're seeing so many more opportunities. So the infrastructure there, it's very cheap.
Yeah.
Now how do you use it to build something meaningful?
Is this in supply chain or what?
Yeah. So one of them is in supply chain. So we did Malexi, which is a supply chain solution that uses blockchain and smart contracts to connect farmers in India and other emerging markets with wholesalers in the Gulf, right? And smart contracts are very relevant there because you're removing the middlemen. And so how do you have trust if you don't have a middleman? Because that's what the is
on the
blockchain.
Interesting.
So those are the sorts of things. So today I would say take a look at blockchain-based solutions that are solving real problems.
Imagine yourself in the shoes of somebody early career who had amassed $10,000, let's say, first $10,000 to be able to invest in something. And came to you for advice on what asset you would suggest they put that money into.
Artificial intelligence, but maybe now 3 years late, 2 years late, but it's never late. What people don't understand is that we have yet not seen the maximum or the end of artificial intelligence.
The actual impact of it.
It's like a snowball, that's going to get bigger and bigger and bigger. So as we know, it's going to get bigger and bigger and bigger. It means if you invest into artificial intelligence today, it won't go to zero. It actually has a probability that's going to go higher is much more because we didn't really come to the utmost application of artificial intelligence.
And getting into that, would you recommend going for companies that are developing the applications, the infrastructure of it? How would you think about, what type of an asset in AI?
That's just a start, I mean, if ChatGPT was listed, that would be yeah, because when you go trying to take a stake in an unlisted company, it's a bit complicated,
So let's talk about that sector, AI, in terms of the three dimensions, right? So on a scale of 1 to 5, 1 being the least and 5 being the most on risk, where would you place it?
1.
1, super low risk. Yeah. It's the new real estate. Yeah.
Super.
And accessibility. How easy is it to kind of get into and pick the right companies and find on a 1 to 5?
2.
2.
Yeah.
And growth potential, 1 to 5.
5.
Of course. And then for that person who had that 10,000, would you recommend they throw it all into this or to diversify that portfolio? And how so?
Don't take me responsible for this. I'm not responsible, but I would say throw it all. It's not it's a sure bet.
Amazing. What about your advice for the next generation? I mean, what do you advise your children, for example, about opportunities and, particularly we talked about AI, the impact that AI may be having on our emerging markets or what they should be really focusing on in this next era?
Of course, I will also tell them all to focus on AI, but what my general advice to younger people is don't look at Mark Zuckerberg or there's a tendency in young people, I'm going to come up with this app and I'm going to be a billionaire.
Yeah.
And then they come up with apps that already exist or apps that have failed. So please take a moment to reflect on what you're doing and see if it exists or not. It's not, you didn't bring the wildest idea ever, you know. And so focusing only on this, that I want to come up with an app so I can become very rich, is in my opinion, short-sighted.
So there's a couple things when I think about like building a portfolio. When you're young, you can take more risk because you have a long time before you need to retire, and generally you're younger, right? You have more earnings potential. And as you get older, 50, 60, you want to take less risk in your portfolio. The second piece that I think about in building a portfolio is like, what kind of access do you have to these investments? And the last piece I think about is actually fees.
Okay, interesting.
Fees are important. How much per year are you paying for either an ETF, which is a fund that's publicly traded, or a mutual fund, or a manager to actually manage your money? So if you're only making 10% a year and you pay 2% of fees per year, like that's 8% a year.
Right.
That's a big difference. So my general advice is, you're not a professional investor, you should just like set it and forget it.
Okay.
Generally speaking, most people have a lot of success investing in the S&P 500, which is like the 500 biggest companies listed in the US. These are huge names that everybody knows, Teslas, Googles of the world, Facebooks of the world, Apples, Nvidia. And over the past 20 years, the S&P 500 has on average returned 10% a year. That's a lot. Like in 10 years, you're gonna triple your money. In 20 years, you're gonna basically do so many more X's on your money. And so that's kind of my general advice first, is like, put it in, set it and forget it. There's basically no fees on this S&P 500 ETF because it's so popular. And that means it doesn't eat into your returns. The second thing that I am actually kind of excited about is actually cryptocurrency ETFs.
Okay.
And crypto is a huge asset class that is coming up. It basically democratizes the flow of money.
So break it down for us. What's a cryptocurrency ETF?
So it's a basket of either cryptocurrencies or companies that are based on cryptocurrencies. So Bitcoin to Coinbase, they're all kind of mixed in there. And the reason why I'm pretty excited about this is historically, world economies have been pretty US dollar based, and that's like probably going to change over the next, 50 years.
Seems that way.
And a lot of people are actually turning to cryptocurrencies because it is widely available, especially in emerging markets where sometimes the government is less stable and has less stable of a currency. People actually just move away from that and go towards the cryptocurrencies. So in that regard, generally speaking, S&P 500 is still tried and true. So maybe I do, 80% in the S&P 500.
Okay, so 8,000 of the
8,000 into S&P 500, 20% into this crypto ETF that's now become available. And then whenever you save enough money, I would reallocate and then buy your home.
I've thought about this so many times. And going back in time, what I would have done in my 20s, I would have literally invested in the lowest cost S&P tracker fund.
You're like, super boring, yes.
Super boring.
ETF.
So how does investing change when you're 20, 30, 40, or 50? When you're in your 20s, all you need to do is you should be able to go into risky assets like equities, which on the long term are not very risky, and just keep adding to it. Don't think about real estate for 10 years. Don't think about bonds for 10 years. And so if you're investing today, you could be doing 70% still in an S&P 500 low-cost ETF. You could be doing 10% in a combination of sort of high-tech bets like, ARK Invest or other ETFs.
Picking specific kind
themes,
of
thematics,
themes.
whether you like water tech or
agri-tech, for instance,
or
that you
space
like.
tech. And then you're doing about 10% in sort of bonds and REITs, and then 10 in maybe a crypto / Bitcoin type portfolio. But of course, if you're in your 30s today, this changes. Your equity allocation goes from like around 80 to about 65. When you get to 40s, this keeps reducing, and your investments, if you're in your 50s and you're starting now, you'd probably be doing 40% in equities. You'd be about 10 to 15% in gold. You'd be a little more in real estate,
Yeah.
and a lot less in, let's say, the more heebie-jeebie tech of today, or sort of crypto. So that is how you sort of build your portfolio, because the portfolio is a lot linked to where you are in life.
Yeah.
The earlier it is, the more you can take risks comfortably, provided you have a long time horizon.
Yeah, it must have been in my early 20s where I got this advice of just keep it simple, put the money in, consistently keep doing it. And it is one regret that I have, that I did not take that advice from that early.
Okay, so I'm not like an investment advisor. And
Understood,
so
yes.
But I'll share my experience. Sure. I think that if you're coming into the investing world, the last thing you should do is like take stock advice from from folks like myself, who's a private market player long term. But what I did on my own many years back is that I have a genuine interest in business. I want to know what are the pieces of the that makes a business successful. And so when I had a bit of a cash myself during the internet bubble, the one thing I did was I actually read a lot of IPO prospectus, because at that time there was all the .com companies, right? You have like ePads and all the
Webvan.
Webvan. Well, I actually did invest in Webvan, but what that does was like just educating myself, being able to expose broadly to the types of companies that were out there. I think number one is the first step, right? Learning how to read the information that's out there, because companies, if they're public companies, if they are then make sure that you know what are the key drivers and what are the key issues that analysts are talking about. Right? That's number one. Number two, as I said, don't take stock. You have to love the sector.
The space itself, yes, okay.
So I was an early investor, very early in Tesla, because I watched the IPO presentation and I said, this guy is cool. He is trying to create, he's basically saying we are not an automotive company. Yeah. We are a platform. We are internet company for automotive, right? And then of course I drove my first Tesla and I said, okay, this company is very great. So some of it is the practical aspects, right? The quantitative aspect, going through your numbers, going through the prospectus, understanding the business, asking yourself why now, why this, and why this team, right? For example. And then I think the other aspect to ensuring that you can be an investor in the long term is to always do something that you like. Like if you love it, you're gonna ask more questions than everybody else, right? Because you're like a mini expert.